The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the wonderful Wednesday, the February 26th edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that, well, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. But much more important than that, during this next 60 minutes, I'm here to serve you. So feel free to give us a call at 877-927-6648. Would love to hear from you. If you can't call in, go ahead and send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. And, of course, in our Tiger's Den, well, any ping will do. So let's go ahead and get this show started. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we've got a mixed bag out here. You've got the Dow up 115, S&P 15, the NASDAQ up 88, Russell's off by 3. The only other indice trading lower, we got the transports off 106 points. That's down over 1% out there. Spot volatility index trading still well above its 50-day exponential moving average. It's trading at 26.69. Gold's back $6. Silver 36 pennies. Light sweet crude is off 70 cents. Lead the charge dollar-wise. The upside, Regeneron Pharmaceuticals $16 and change. Netflix is up 15. Inspire Med Systems is up 13. To the downside, it's Booking Holdings off 54. Coca-Cola Consolidated is off $45. Grayscale, Ethereum off 28. So we have things to look at, but I know that what folks want to look at first are really the equity markets and what's going on. So to do this, we're going to so let's first step back. We've had a rally. It was a good rally. Dow was up 400 points, 400 plus points. Now, that was to be anticipated. Why was that to be anticipated, Steve-O? Well, because of yesterday's one-day rate of change in the spot volatility index, which was up on a closing basis 11.27% over the prior day. Those are all the blue arrows that are on my screen. What we typically will see on days like that is either a bottom or a bounce. And at this stage here, all we've seen so far is a bounce. We're going to continue to analyze that. Now, could this be some type of change in trend? If there's going to be a change in trend, something more than just the bounce that we've seen so far, what we need to see is we need to start seeing resistance levels fail. So where would those resistance levels be? To give you an example, let's take a look at a resistance level that has not failed and worked as resistance. That's in the Russell 2000. So if we take a look at the Russell 2000, now how is Steve-O going to figure this out? The way that I figure it out is I try to, it's just like, so I'm fortunate enough to live on the water. And so I get to see the tides, I get to see the waves all the time. I get to see all the different surfers that are out there trying to time waves. And in essence, that's really all that we're doing here is trying to understand the timing inside the market. And so when I take a look at this, if there's going to be a change in trend in any instrument, you need to start seeing short-term levels of resistance fail. So for resistance, you and I use one of the resistance levels that we use our TD 9-count pattern. That's where these green horizontal lines are. So in the case of the Russell 2000 for a 30-minute time frame, you'll see that 1586.50 is a resistance level. That resistance level was formed. Well, I'll tell you when it was formed. Well, I can't. I guess I don't have the nines turned on. I can't tell you exactly when it went into place, but it was at midnight last night. That is the level. It's not a swing point. It's just simply where there were 9 consecutive closes on a 30-minute basis. that led to a TD 9-count pattern out there and creates that support or resistance. In this case here, it was resistance. It was a count to the downside. So in order for the Russell 2000 to have said, hey, I'm ready to take this idea of a rally into effect, price would have had to clear that. Price will always, in any instrument that is moving lower, if it's going to start moving higher, you need to start seeing resistance levels fail, whatever you use. I'm going to suggest to you that you understand the TD9 count and that you use it because it works beautifully. Now let's go take a look at some of the other instruments out there. Let's go take a look at the NASDAQ. So if we take a look at the NASDAQ, same thing, same setup, and this is also a 30-minute time frame. And in the 30-minute time frame out here, you'll see that 89.29 is the level. We're traded 89.13. So price was able to move above that. We'll go back into why did price stop where it did. And now price is pulling back, and in essence, it's really testing that 89.29 level. Granted, it's trading below, but this is a 30-minute time frame here. If we're going to see, and so we want to understand where did price pull back to on a retracement out here. So we know that we've, at least inside the NQ, we've seen a key level of short term. This is just short term out here. Short term resistance fail. Now the question is this retracement just getting ready to set up the C point of an A to B equals CD pattern? I don't know the answer to that, but we're going to go try to figure that out. Now, the first question would be, hey, Steve, why did price stall out where it did this morning? Here we go to an even shorter term time frame chart. And the shorter term time frame chart would be, in this case here, is a 10-minute chart. Now, I didn't know it at the time. I just simply continued to surf around through my multiple charts to try to understand what was going on. It all made sense to me in that in the 10-minute time frame chart, it finally generated a TD setup 9 count. It was bar 9 that identified that short-term top. You're looking at this. I don't put these numbers in. I don't even put the Chapman wave counts in anymore. Those things are automated. I'm still still adjusting that. Just a tad out here. So everything is just simply automated here. We just simply go ahead and decide what time frame it is we're going to look at in what instrument. Now, if an instrument is simply going to pull back to just test support out here, so we know that we have a valid TD 9 count pattern that identified the top. You and I use this stuff all the time. And price pulled back to do what? To test where it had broken out. And that is at the 88.80 level. Now, as long as the NQ, and this is for a 10-minute time frame, stays above 88.80, this still has the potential to then set up that C point of an A to B equals CD upside. Now, it may be a Gartley sell pattern on an intraday time period that sets up the next big sell in the marketplace. I don't know. We'll have to see what's going on at that time as we sift through the different charts. But right now, what transpired so far this morning here, even on the 10-minute time frame chart, you can see at about 4:30, that generated a nice Rhodes momentum indicator pattern. You can see the piercing candle that's out there, and it moves up until it creates one of our topping signals out here. And that was the TD9 count. And then price pulls back right to where it should have and found support, and that's at that 88.80 level. So that's what I'll be watching. Now, on the ES Mini, I don't know if it was doing the same thing or not out here, but let's go take a look at it. We can put this up. I don't think it made the 9 counts, but let me see here. I could be wrong. Oh, it did. So the ES Mini did the same thing, and you can see right now it's just tinkering with the 31.38.75 level. That's its breakout area. I think our focus should be on that NQ, certainly the Russell 2000 and that 1586 level, perhaps at some point in time. But this is what the markets are doing intraday. We're focused on intraday because if there's going to be signal changes, they occur here first. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we were taking a look at the intraday time frame charts. We were looking at the 10-minute time frame chart inside of the NQ out here, and I've switched back to another 10-minute chart for the NQ. This one using one of Tom's techniques out here. He loves that 10-minute time frame chart, and the right side of my chart is clipped off YouTube. Thanks out there. Guys in the production room, you might want to check in on that. Here, if you take a look at, so this is the open, the 9:30 open. You can see the volume there was 49,000 shares. So we know why the top came in. We saw that TD9 count. We also saw a price pulled back to the breakout area of support inside the NQ. But just simply from a volume perspective, the pullback out here was tested with 23.5 thousand contracts versus 49,000. So that was a test and rejection out there. So the 8880 area is a key level to be watching out here. Okay, so that's really what's going on from an intraday standpoint. I see that I've got a question that is coming in. Let me change over here to some other charts. This one coming in from Brent. So let's go read Brent's question out here. Brent says, "Hey, Steve, I decided to buy into BGS yesterday." Remember, folks, Brent's been watching this thing for a bottom. He's a great bottom fisherman out there. We got to get him over here to go grouper fishing, but that's neither here nor there. So he bought it yesterday in the 12s. Seemed like the worst case was factored in. I would typically wait for earnings. In this case, it already is at the low level. It looks like an island bottom with today's gap up. Would you appreciate your analysis? So let's go take a look at it out here. First, let's put up BGS. Let's put it over on this set of charts out here, our 3 time frame charts out there. And so is it an island bottom? That was first Brent's question out here. Look at that gap to the upside. He is loving life out there. So nice trade, Brent. This thing has really moved. And so is it, come on, work here. Get rid of that A to B equals CD down pattern. There we go. It certainly qualifies as an island bottom pattern out here. So you've got an island bottom pattern. You've got, on a weekly basis, you've got a We'll go check the chart, see if price was moving lower with less relative energy. There's your three-river morning star. Price is already in one session above the top of that daily profile at 1474, back inside the weekly profile out there. The monthly chart, you've got a hammer candle right now, but we still have a few days before you can confirm that. But at this stage here, Brent, nice trade, good volume behind it. And it looks like this is targeting the 1724 area. Let's go ahead and pull over Stevie's other chart, see what other information we might be able to glean for Brent here. So let me update this. So it looks like from a targeting standpoint, the next level of resistance out here, Brent, for you is going to be 1680. So 1680 is going to be that TD9 count breakdown level. If price can clear that on a daily basis, then you're looking at, it looks like about 1809. So watch that 1680 level. You are off to a great start. Let's go back to the weekly time frame chart. The weekly time frame chart, what we can see is price was moving lower, doing with less relative energy. We talked about that three-river morning star pattern that is out here. I don't know. 1575 was a breakdown area. Sometimes they can act as short-term or resistance out here. I would rather sometimes they can. But this thing is off to such a good start. I wouldn't really be paying too much attention to that. Instead, what I would be looking at is if it can clear the previous swing point high, which was your TD9 count pattern that went ahead and took price lower, what you should be looking at on a weekly basis about $23. Of course, we know we're inside that weekly profile, so you've got resistance also at 1663 and 1724. On a monthly basis out there, you're in wave number 7 to the downside. That is letter G. Ideally, this will close above 1708. That is Stevie's red line. That number is going to change from time to time, but most prices moving up or down. But at this stage here, everything looks like a great trade out there. So best of luck. Yeah, you've got that nice little island bottom and looking very good. What a great bottom, fisherman. That was Brent. No other questions at this stage of the game. I don't think there's anything inside the Tiger's Den requested. So let's continue to surf around the charts and see what we see. Now, we didn't really spend any time. We didn't spend any time on the daily charts out there. Ruby's asking, Steve, the Russell 2000 been weak as looks put in a spot where the pivot point will be more resistance. Well, Ruby, the resistance, I would say the real key level of resistance at this stage of the game, unless there's another TD9 count on a 30-minute time frame to the downside form, it's 1586.50. 1586.50. You can see how price has tested that on the 30-minute time frame, but did it really all morning long. The first test was at 10 o'clock. The next test was at 11 o'clock. There was really just a slight close by a couple of ticks above at 11:30. Immediately gave it up. So that's really going to be in the Russell 2000, in my opinion. That is going to be the key level. Now, each of the equity futures contracts, what they did earlier this morning was they generated the Rhodes momentum indicator signals. In fact, let's do this here. Let's go take a look at the Russell 2000. We can look at all of them and just go through the different time frames, Ruby, since you brought up the Russell 2000. So let's pull over the 30-minute time frame. We were looking at one 30-minute time frame, but here you can see the Rhodes momentum indicator pattern at work earlier this morning at 4:30. Price moving lower, doing less relative energy. You get that nice hammer candle. Price running right into that support level or resistance level that we took a look at. At what level will you say fail? It's already failed. So I don't know if I completely understand the questions. Failed to clear resistance, 1587 type area. This pattern here would fail if price moves below the low of that hammer candle, closes below the low of that hammer candle that took place earlier. That low, by the way, is going to be 1553.40. Then that would be a failure of this pattern. That doesn't mean that another one can't possibly form out here. Although it doesn't look like it could because the relative strength indicator got up. It looks pretty close to, well, no, it didn't. So another one could actually form if there was a lower low, but you need to rinse, repeat, do the whole thing. You need to see another bullish reversal candle. So that's on the 30-minute time frame for the Russell. What was going on the 60-minute, the hourly time frame for it? Same type of thing, price moving lower, doing less relative energy out here. On the hourly time frame, in this case, no bullish reversal candle, so it's a no-no. But price did run right in the resistance, 1586.50, the top of its 60-minute TAS market profile. Let's go take a look at the 120-minute time frame, and you'll see when we get over to the weekly or the daily charts out there, they're not really going to help us in identifying, is this more than a counter trend rally out here? Here on the 2-hour time frame, you can see the Rhodes momentum indicator signal. Here's a Three-River Morning Star. So then again, Ruby is talking to you about the low of today's session being a key level of support out there. So I think that might answer your question about what sets up a failure. And as we start moving over to the longer-term charts, you can start to see other levels of support. Now, on the 4-hour time frame chart, what has triggered on this move lower is now a Rhodes momentum indicator signal. So in the 4-hour time frame, what's been really key resistance out here has been Stevie's red line. That right now is printed out at 1585.60. So on a 4-hour basis, if you were to see some type of bullish reversal candle and price close about 1585.50, tells you about a run to 1598, but also tells you that the 4-hour time frame may have changed its trend too. We're about to go to a breakout here. Let me just jump real quickly to that daily time frame. So if there's a failure, Ruby, where's price headed to? 1544. That's the next downside TD9 count breakout level for the daily time frame for the Russell 2000. Steve Rhodes with TFNN. Be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, Dow's up 78, S&P 12, NASDAQ 100 up 0.9%, up 79 buckaroonies out there. No requests in, so give us a call at 877-927-6648 or send me an email, steve@tfnn.com. Inside that subject heading, please put radio show questions. So what do we want to go take a look at? Only halfway through the show, oh, here we go. We've got a request. Thank you. This one coming in from Eddie. So Eddie writes, he said, does this up and down price action feel like a bottom is trying to be formed? Sorry if you covered this already, but you just tuned in. Also, can you look at NTNX? So, I'm going to answer your question since you wrote in. Look, the only thing that we know, well, there's many things that we know. One of the things that we know out here is that we should have seen some type of bounce, which has taken place. And the reason is well, there were several reasons, but one of those reasons just simply that one-day rate of change, just so we can be consistent with regard to the spot volatility index, Eddie. So we know that, and we've seen that out here. And then the next piece of it is do short-term resistance levels begin to fail? Now, I can't go through all of that with you. This show is obviously being recorded and will be replayed maybe in about an hour from now, hour and a half, something like that. So, Eddie, I would just suggest going back and watching the opening, because I really covered that, and then you'll be able to hopefully I articulated why the markets were doing what they were doing. And now what we have to do is wait to see what the market's next reaction is. What it's done in its pullback, just in summary, and I'll show you one chart that we didn't take a look at, it's pulled back to levels of support. Another level of support out here, or an area to be watching, is this morning's apogee pivot point. And so if we take a look at the ES mini as we speak right now, it just happens to be sitting on it, or very close to it, 31.35 You're 1 point below that. So that is a key level of support. If you take a look in the right-hand panel, what you will look at is the NASDAQ, and this is a 30-minute time frame chart. Its apogee pivot point, 88.69. The Dow is 27.105. That's where it's sitting, and in the Russell 2000, about 15.77. What we know right now is that the ES, the Dow, and the NASDAQ, Eddie, have pulled back and have tested that level and have rejected it. We're 2 minutes into the 30-minute bar. We have to wait till 2 p.m. to see if this is going to be another rejection. The theory here, the short-term theory, is when price is above apogee or perigee, or especially when it pulls right back to it, depending on your current outlook, that's either a buying opportunity or you're waiting for a close below it in order to be a selling opportunity. And that's how that pivot point, and that's the exact time of when apogee occurred this morning, I believe it was. I'm not going to tell you the time because I can't remember exactly. Might have been like 6:35 or something like that. Something like that, but I could be off. So let's not go there. But you did ask me to go take a look at an equity for you. So let's go do that out here, Eddie. And that equity is NTNX. So let's get that punched in. Let me get it on both sets of chart, NTNX out there. And where did I put that? I put that on my 10-minute chart out there. Sorry about that. Put that in the wrong spot. Let's come back out here. Wow, Brent, look at that thing move. NTNX. That was on BGS. So this is Nutanix. So you definitely don't like today. What's your question? Earnings after the close, already in at around 30. Well, what you didn't want to see this do yesterday was close below 35.34. That was a bullish structure daily profile. Let me show you. When I say bullish structure, let me define for you what I mean. And it's in a little bit of a larger consolidation, but just give me a moment here just simply to turn off price. And what you will see when price gets turned off on this daily time frame, what I want you to focus on, Eddie, with regard to this market profile, is I want you to take a look at where the bottom of the box is. That's 35.34. The center is at 35.97. So the bottom is buyers. The top is sellers. That's 37.55. And the center is both buyers and sellers. When we have both buyers and sellers closer to the bottom of the box where there's buyers, Stevie refers to this as a bullish structured profile. Price should have held 35.34. Just the opposite is a bearish structured profile. For example, the one that's over here, right around November the 26th, 27th, 29th, something like that. Bearish structured profile. Allow me to turn price back on. When price closes above a bearish structured profile, that is a very bullish outcome out here. If we take a look at, so we turn price back on, you can see how price actually gapped up above that. Now what you've got is price yesterday closing below, and on a daily basis, you're extending those losses to the downside. Where's price likely headed back to? Now, Eddie, that I've shown you the daily time frame chart, which then shifts us over to the weekly time frame chart. And we talked about a bullish structured profile on the daily. What is it that you see on the weekly time frame chart? Exactly. You see a weekly bullish structured profile. Now, with price below the daily profile, if you're wondering where price is likely to head to, not a guarantee, but you're looking for probability, you're looking for odds. This is a game about helping us to identify support or resistance and then understanding where price is trading to. Where prices trading in relationship to support and resistance out here. And so in this case here, we would say Nutanix, NTNX, is likely headed to the 3102 to 3167 area. Now that's still above your buy point out here. And on a monthly basis, price has found resistance really both at the bottom and the center of its monthly profile. So with regard to, now let me just take a look at Nutanix on my other sets of charts out here. But that gives you, so we're going to say the price target to the downside's 3102. Now, just like the daily that broke through a bullish structured profile, if this thing breaks through a bullish structured weekly profile, that's a problem. And the only levels that we can then go to, because price is already trading below the monthly, is see if there's some breakout areas on the charts to identify where price might head to. Now, what you also didn't want to see in Nutanix on a daily basis was the mere fact that this made a Rhodes momentum indicator top. That was the high. That was the bearish engulfing candle from February 20th out here. So on the daily time frame, if price busts through those levels of support, the next level of support out here is at 3124. That's the most recent TD9 count breakout level. On a weekly time frame, let me put this up. You don't like the fact that price right now is below Stevie's red line out there. That red line, a close below that, or it's green line, I apologize, 3328. Why won't this chart update? Why won't it update? Well, sometimes I got to do this to this crazy mouse that operates 3 different computers at one time, which is a beautiful thing when it works out here. So with regard to the weekly time frame, Eddie, what price was able to do was get up towards a resistance level. Not didn't get all the way up there on the weekly basis. That was $40.10 out here. But what you don't like is trading below. Now, the week's not over. This means, what you look like on Friday, not necessarily Wednesday. But with price trading below Stevie's green line at 33.27, almost more certain that even a higher probability that price will head down and test 3102 to 3167. Below that, the level you would be looking at is 2603. So that's what we see on the daily. That's what we see on the weekly. And the monthly just doesn't have enough time data, enough bars for me to be able to do any good for you. So, Eddie, thanks so much for writing in. Listen to the early segment, the first half hour of the show out there. I think that'll answer your other questions. And thanks for taking the time to write in. I believe we had a request inside the Tigers Den. Can we look at the VIX? We absolutely can take a look at the VIX. So if we go take a look at the spot volatility, and let's just take a look at the anomaly that is out here. What's that anomaly, Steve-O? It's simply where the spot volatility is trading in relationship to every single forward futures contract. It's in a backwardation. And that says the market is trying to form some type of bottom. Not that it's formed one just yet, but it is trying. Steve Rhodes with TFNN. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD, Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We got markets out here. You got the Dow trading down 127, S&P up 11 points, NASDAQ up about 2. Let's go back to the spot volatility index. Let's take a look at that, see what information we can glean off of that out here. What did I do? I think I'm kind of screwing up here. There we go. Let's get back to the charts. So we were taking a look at, so we're looking at this. So we're looking at this right here. So you've got this is just abnormal out here. It is totally abnormal. And it's going to correct itself. The question is when, from a timing standpoint. But if you take a look at that spot, this is how whacked out it is. Take a look at the spot volatility index, trade out at 28.39. But look at all of the other forward futures contracts. Now, if you take a look at October out here, you're going to see you've got a little bit of a spike. It's about a 15+% spike between September and October. And I think I posed this question yesterday, but I'll pose it to you again today. Why do you think October has a little bit higher spot or futures contract, not a spot, but why do you think October has a higher futures contract? Substantially higher, in fact, higher than November. What's going on around October, November of this year? The election. So, when we take a look at this set of charts out here with regard to the volatility, if we're trying to get into the minds of investors and traders out there, you know what they're really saying to you and I? Well, maybe don't. And how can I prove this? But why is there that spike? Is this more election-driven, what's going on inside the market over the last several days, versus coronavirus? Is it a combination? It's certainly, when we take a look at this chart here, this is not made up stuff. We're just looking at the data out here. And so the data is telling you something about what's going on through our election process. But be that as it may, regardless out here, when this will correct itself, and as this corrects itself, it gets in order, because this has been going on for days now, right? And these other futures contracts really haven't budged much. You take a look at where they're trading right now. They really haven't budged much. Now, the real key to a bottom here, or a bottom signal, this is not going to be able to identify the bottom tick or anything inside the market, is going to be when that gets back in line, when at least the spot volatility index is trading below its 3-month counterpart, and that's the right-hand panel chart that we're taking a look at out here. And you can see that ratio is well above 1. The ratio is above 1 on every time frame, whether it's 3-month, 6-month, or 1 year out there. In the olden days, I used to have to take a look at all the forward futures contracts, do all these mathematical calculations out here to track this stuff. And then thankfully, they went ahead and created these other products out there so that I can do this stuff electronically much easier. So I don't know what other information, Ruby, you might have wanted with regard to the spot VIX index out here, but this is what Stevie sees when I take a look at it. Now, if we take a look at the New York Stock Exchange, man, you talk about getting to just these extreme oversold conditions. Just take a look at this here. This is probably a little bit better. Now, you can see that right now, the advanced decline oscillator, that's the difference between the 19 and the 39 period. In this case here, it's daily chart we're looking at. So it's the 39 and 19 daily levels that are being taken a look at as far as the advanced decline line. And from that, we can create an oscillator. Now, you can see that back in December of 2018, December 26th, specifically, that reading got down to, it was really Christmas Eve, down to minus 148.01 out there. No, what am I? Hold on. It was 300. Let me get my cursor was in the right spot. Minus 318.16. And man, and that is, we're just in, the market is just in just a period of time, short period of time, it's just in extreme oversold condition out here. And you can take a look at all the other instances when that advanced decline oscillator started getting down below this minus 250 level out here. So we'll have to keep an eye out on that. But again, it just goes back to really that opening segment. We have to see these key levels of support resistance continue to fail if there's going to be some type of bottom other than just a simple counter trend rally as a result of that spot volatility index being up by 10% in just simply one day. Okay, no other request just yet. So what else should we go take a look at out here? Gold. Let's go take a look at Goldilocks. Usually requested out here, and go see what it's doing and what is it that folks should be watching for. So what do we know about gold? We know that what gold did, what gold has done, it's generated two beautiful topping patterns out here. It's got the TD9 count, and it's got the Rhodes momentum indicator pattern, and that occurred with yesterday's bearish sash candle. Now, what's transpired today, remember when you get these bearish signals at the top, all the price is supposed to do, all the sellers are supposed to do, is try to bust out support. So where's the first level of support when we take a look at Goldilocks? It was 1634. What's at 1634? Stevie's green line. So that is going to be a key area of support. Now, a brand new profile has formed inside of gold, the bottom of which is 1580. The top of which is 1679. So there's our capped range out here. So even since gold has rejected a key level of support, if you can't bust them down, maybe he tries to bust them to the upside. Where's that bust them to the upside? That would be 1679.40. If price closes below 1633.90, then you've got really two areas of potential support. 1617, that's not that much further below, and then 1580. And then below 1580, you're looking at 1564, 1551, 1507 would be the numbers. In summary, you've definitely got topping patterns in place inside of Goldilocks, not until those highs, the most recent high, close to 1700, gets taken out. Will this be? And at this stage here, it's more neutral than it is anything because price is tested and rejected support. And then you've got the top that's in place. So that's what Stevie sees when he takes a look at the gold contract out there. Let's go take a look at silver. What is the message in silver? Is there a different message in silver? How do I get to it? There we go. Can move that out of the way. God, you got to love these markets, huh? I mean, you went to almost flat in the NDX. Now you're up 40 points out here. So let's go take a look at silver. Now, silver generates a Rhodes momentum indicator top. It did that yesterday with that bear separation candle out here, bear separating line candle, confirming the Rhodes momentum indicator. Price is supposed to be able to push down to support. Well, where's support? Really, here we've got two levels. One is at 1811. Where's the other one? The breakout area at 1789. That area is held. If we see price get down below 1789, odds favor move back to 1690 out here. So in the case of silver, we can say that also a level of support is held. The problem is silver doesn't look as good as gold. Why? Because what we also saw was that the intraday rally stopped right at Stevie's green line, 1825. So right now, 1825 is resistance. Support is about 1789. You'll watch those two levels because a breach or close above or below will signal to you the next direction or the next spot or the next area where silver would head to. So to the downside again, that level would be 1690. To the upside, that would have to be the top of its daily profile, and that would be 1870. That's what we see when we take a look at silver. Let's go take a look at natural gas out here. What's natural gas doing? And Stevie's response to that will be not much. We take a look at it. We've got yesterday was a doji candle. Today is actually a high wave candle. If we see price get just a little bit closer to the opening price, and we have two dojis in a row. What do those two dojis mean? You know, they mean more to me at resistance than they do right here, right now. So they don't mean much. Steve Rhodes with TFNN. Right.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So we've got the last segment, the 2-minute wrap. Dow's off 53, S&P down a couple of points out here. So let's stick with the ES Mini right now. Let's go see what's transpired since we've been on the air. We've seen a move down. We've seen a test of the hammer candle. Hammer candle that occurred this morning around 4:30 out here. That's right here, exactly at 4:30. So prices tested that. It's bounced off of it. If the low was put in then what we would be looking at is some type of A to B equals CD pattern to the upside. What would that look like? That A to B equals CD pattern would look like this. Let's draw it in. We're not saying that this is the pattern just yet, but it's one potential possibility. So the A to B equals CD pattern, the 1-to-1 would take us up to 31.94. I would say that if price is able to clear this going into the close today, so let's say there's a short covering rally going into the close, and that means if price clears this 31.83 level out here, then odds favor what we would see overnight as a move to 32.47. To the downside inside the ES Mini, what becomes the next target? Let's pull over the daily here for you very quickly. The daily, the next. Okay, we were going to do that. What did I do? Delete it? No. Okay. Let me just open this back up here. The next daily target, so 31.16 is the one that's being tested. That was a breakout level. I have to make a quick adjustment out here, add another line. So give me a second to do that. Let's go from 3. Let's just make it unlimited. That'll make it easier out here. So below 30. Give me a second here. Let this populate. So below 31.16, the level would be 30.63 out here. And then to the upside resistance, you can see how the prior level of support, breakout support at 31.81, also was a level that was resistance earlier this morning. So you're going to want to watch to the upside, 31.81. Below 31.16, we're looking at 30.63 out there. So, folks, hopefully that's been helpful to you. Thanks so much for being here. Stay tuned. 2 great hours left. You've got your favorite polar bear, David White. He's up next. After that, Tom O'Brien. And, hey, tomorrow morning, a treat. I'm going to be recording my show from 8 to 8:30. So please tune in tomorrow between 8 and 8:30. Have a wonderful Wednesday, folks. Take care.